So we've gone from $2.1 million of revenue in 2023 to 3.2 in 24, but an annualized run rate of $5 million. And that really means that in 25, we can expect to see further substantial growth.
Hello, you're watching Proactive. Joining me is Adrian Hargrave, the CEO of Scene. Adrian, very good to meet you. We haven't spoken to you before, so for viewers not familiar with the company, tell us about Scene and what you do.
Thank you, Stephen, and thank you to Proactive and everybody for having me on the show this morning. Scene is a video technology platform business. We've been on the market since 2019 when we IPO'd as Entertainment AI. And really, our core focus is transforming our clients' video profitability. And we use our AI, which looks within videos to find the most interesting segments of a video and helps them to monetize that across different platforms, primarily on their own websites, but also on social as well, by being able to remix videos and create shorts quickly and getting those out. Over the last 3 years since we raised funds, we've transformed the business into one that's really focused on key vertical markets and targets. We really look at it as that we provide video commerce, which is a really big and upcoming sector. It's already multi-billions, and you're beginning to see people trying to create the new QVCs of the modern era. And then we're also working with people, as I said, on social, on their on web indexation. But finally, we're also moving into the training and education market as well, where there's a huge opportunity.
Adrian, could you give us an example of some of the clients you would service with this?
Absolutely. So one of the sectors we've had a lot of traction in has been the sports market, for example, where we work with clubs in the UK, we work with clubs and leagues in the US. And as an example, you'd be watching a highlights package from across any sport, really, and we'll find the places where the most interesting pieces happen. But more importantly, there are other packages that can do that, is then we help them to sell or merchandise or engage in drive interactivity with fans by driving contextual calls to action. And by that, we mean, for example, if a player scores a goal, up may pop up their profile or a little picture of them in the corner saying, buy my shirt, or it could be watch their last interview from when they joined. It doesn't always have to be about selling. But obviously, one of the key things for us when we work with people in the sports world is that historically video has just been a cost center. It's not been a profit-making center. And that's one of the things we help people to transform. Similarly, in the e-commerce space, people have videos on their websites, and in the donation space, charities and places like that, people make these videos with the idea of getting people to part with their money. And what we're doing is we're helping to shorten that process, especially as people watch more video on mobiles, which means they're watching in full screen, and maybe the traditional ways of actually converting a viewer into a paying customer is harder. Using our technology, where we put in calls to action to drive direct sales and direct engagement, we're typically getting 9% click-through rates within videos, which is driving 100% plus ROI for our customers, partly because we operate on a mix of SaaS and performance fees for most of our clients.
Well, Adrian, you're up with a trading and operational update for your 2024 financial year recently, and you talk about turning that important corner at this stage. So it looks like you're really headed for scalable growth now.
Absolutely. So one part of our business is the technology side. The other side is working with what we call with YouTube channels and creators to help them increase their monetization, which is a cross between our technology and a consultancy business. Historically, that was lower margin. And so really in 22, 23, since I became CEO, we focused on driving more higher margin technology growth. The great thing in 24 is that we continued that growth on the technology side with our 90% plus margins, but we've also started regrowing the other side of the business at a higher margin than before. So we've gone from $2.1 million of revenue in 2023 to 3.2 in 24, but an annualized run rate of $5 million. And that really means that in 25, we can expect to see further substantial growth. We've hit cash flow positive in December last year. Obviously, we have as a board to find the right balance between investing in growth, investing in more sales and marketing to grow the business, thankfully, we're at a point that most of the technology is at a stage that we don't have to invest more today. But you can see that as we grow the revenues, we should be driving a profitable business for for the foreseeable future. And the important piece here is there's a massive target market, and really, if you look at the size of the video commerce market, which is taking off on TikTok and Instagram, what we're helping people do is to take it back into their own websites and effectively create their own retail stores using video, rather than what's historically been the case of, if they've done video commerce on those platforms, it's like having a concession in a department store. And there's room for both models. So we're not here to take on TikTok and YouTube, obviously. The final piece I'd also like to add, Stephen, is that in 2024 we raised money to develop out our training program, and that we've been doing together with our partner American Leak Detection, where we're speeding up the training of technicians and getting people out into the field faster and completing jobs faster by delivering those key video moments. So in their case, they go to fix a swimming pool leak. When they fix that, maybe there's an issue with the skimmer. They can't quite remember how to do it. They can just call in their Salesforce application and look for the key video moment related to how do I fix a skimmer. It's also used for customer training when they're installing new products, and we've sold that to a couple of events businesses too. So that's a new string to our bow. And again, I think that should see us drive further growth in 2025 over and above what we've already achieved over the last 12, 18 months.
Adrian, what's the focus for 2025 as you turn that corner?
The focus is we've reached the point of operating cash flow positive. We are absolutely going to maintain that and grow that. The real focus, though, as I said, is we've really developed most of the technology we need to go to market. There's always going to be the need to continually look at upgrades and potentially investing in new products and as the technology moves, different platforms are created. But really, for us, the focus is on driving more sales in our core vertical markets. So those are, let's help people with their video commerce applications in sports, in retail. And when I say video commerce, that's also in things like universities and charities. Then we're going to help our social media clients drive more revenue by taking their big back catalogs that they, hours and hours of back catalogs that they don't know what to do with, and help them create shorts and create remixed content to drive additional YouTube and Instagram views and above all revenues. And then we're going to be really focusing on the training side as well. And I expect to hire somebody to really drive that. In a perfect world, I'd love to be in a position where we're announcing bigger deals and bigger customers as well. Lots of our deals we've been building up slowly. We've got quite a lot. We've got more than 50 clients for our technology services. In a perfect world, we'll start driving, 6 and 7 figure deals during 2025 as well.
Well, let's hope you do strike those deals, and I hope you'll keep us updated on any progress with those. Thank you very much for speaking with us today.
Absolutely. Thank you, Stephen, and thank you for having me on. I look forward to speaking again.
That's Adrian Hargrave, the CEO of Scene.